good morning. You're watching Market Cafe on ET Now with me, Vinny Motiwala. Along with me is Harsh Saita as well. A very good morning to you as well, Harsh. And obviously, happy Monday coming in. Is that the word that we could be expecting coming in on the D Street as well then?
Well, yes, Vinny, let me quickly take it across and try and see what's happening in global markets at the moment. The US unemployment numbers came out on Friday last week. That's how at least US markets closed, and they were largely flat on the close. Let's have a look at those numbers. Really, markets, in fact, employment numbers came in better than anticipated, which obviously left room for the Federal Reserve to hike rates if required in their December meeting. So what is expected now in December, at least what the markets were initially expecting, was that the December commentary will be more hawkish than expected. But as the day progressed, markets got better and better. They kind of accepted the fact that the Federal Reserve will, or rather rates will not be hiked as much as earlier anticipated. And all three markets, all three indices in the US closed flat. We saw pretty much even the Nasdaq closing 0.02% lower. So largely flat is where we saw all three markets. Unemployment in the US continues to be at 3.7% thereabouts. We're also seeing wage inflation of 5% on a year-on-year basis, and that will really be the key number because that will add on to that inflation number going forward. As you can see on your screens, Nasdaq was down around 1/5% in trade. But going forward, smaller rate hikes expected. That's what's really penciled in. Markets made a bit of a recovery after being lower initially. Even in Europe, across the board, markets largely flat. The DAX, in fact, was higher 1/4%. But when I'm looking at the FTSE, the CAC, as well as the Stock 600, largely flat in trade with a negative bias. At least that's where the global markets are at. When I'm looking at the US futures as well, absolutely flat. We're seeing the Dow futures down around 1/10%, the Nasdaq futures down around 1/5%, and the S&P 500 between those two. So clearly, we're looking at a slightly muted start even in early trade this week. That's where we are at the moment, Vinny.
Absolutely, but let's also get in an update, coming in from the OPEC Plus meeting. All eyes were actually on this meeting as OPEC Plus Alliance has actually now agreed to maintain the production at the current levels in the latest meeting. Now, the organization paused to take the stock of the global oil market that's roiled up by the uncertainty that we've seen coming in Chinese demand as well as Russian supply. The 23-nation group has only just implemented the hefty 2 million barrel a day reduction agreed at its last gathering in October. The volatility that has been driven by the European Union sanctions on crude exports or from OPEC Plus members Russia, which comes into effect from today. Now, meanwhile, Russia rejected the $60 price cap on its oil and agreed by the EU and G7 and Australia, which Ukraine said would contribute to the destruction of Russia's economy. Also, let's move on and, actually listen to Lawrence Belanco of CLSA on where he's seeing the crude oil prices in the coming year.
It's been quite volatile in crude, and in fact, last Friday we were looking at a break below this $85 to $88 support area. But after the last 4 sessions, we've had consecutive gains, and Brent has managed to recapture that $85 to $88 area. So we're getting some whipsaw signals within Brent. Essentially, you've got this broad trading range of 85, 88 being the bottom end, and roughly 123 being the top end of that range. So looking for more volatility and not a very dynamic trend in Brent right now. It's more of a trading range.
So if you have to, let's say, mark 3 assets for us, where you think markets right now are extremely overbought, which is that sooner than later they will have to align to their means. Which are the 3 asset classes or markets where things are extremely overbought?
Yeah, we probably think overbought's a misused term in technicals, because most of these indicators look at the momentum and the rate of change of momentum. I mean, I would highlight where we've seen that slowing upside trend and a reversal is obviously in the dollar. And we think that trend continues to unfold in favor of further dollar weakness. We've recently seen a base breakout in gold, and we think that will continue to re-rate, at least in the first half of 2023. And we've got upside targets of 80, 90 to 1900. So we think gold can outperform. And then if you're looking at the relative performance, we think emerging markets can outperform developed markets from their recent basing pattern and in the first half of 2020.
Well, switching focus on inflation, European Central Bank's vice president expects the Eurozone inflation to stay elevated at current levels for a few more months going forward. His comments came after inflation eased far more than expected in the month of November. He believes inflation will ease more clearly in the first quarter with a print of 7% by mid-2023. He also warned against the risk of an M-shaped evolution of inflation where it would accelerate again after slowing down, as well as avert its stabilization clearly above that 2% mark.
And you've seen a lot of warnings coming in for the recession, about the recession, and now Goldman Sachs traders could be in for a surprise as cost pressures force the firm's leadership to cut their year-end bonuses. Executives in the firm's global market division were warned in the week that its compensation pool will be slashed by a low double-digit percentage, according to reports. This even after the firm's annual trading revenue is on track to top the $25 billion mark.
And US logistics managers are bracing for delays in the delivery of goods from China in early January as a result of cancelled sailings of container ships and rollovers of exports by ocean carriers. Carriers have been executing on an active capacity management strategy by announcing more blank sailings and suspending services to balance supply with demand.
An update coming in from China on COVID. Chinese authorities are actually continuing to ease the COVID-19 restrictions, with several cities including Shenzhen and Beijing no longer requiring negative tests to take public transport. Beijing has also begun shutting down public testing booths in a move that has prompted both cheers and concern. Still, many analysts say that they still do not anticipate a significant reopening of the country until at least after March.
And Elon Musk said Apple Inc. has fully resumed advertising on Twitter Inc., further de-escalating a brewing war between two of the world's most influential tech companies. Musk lashed out at Apple last week, accusing the maker of iPhones and Mac computers of mostly stopping advertising on Twitter and threatening to withhold the site from its App Store.
That was all the global update we had for y'all this morning. But viewers, don't go anywhere. We'll be back with more domestic update, more stock-specific update after this break.
Well, the Power Ministry, welcome back, has provided a major relief to hydroelectric power generators. The centre has waived interstate transmission charges on electricity generated from new hydro projects. ET Now's Prakash Priyadarshi is here with all the details. Prakash.
Yes, decided to provide waiver in interstate transmission charges on electricity being generated from new hydro projects. As per the Power Ministry statement, interstate transmission charges on transmission of electricity being generated from new hydro projects will be waived for 18 years from date of commissioning. As you are aware, that the waiver is already available to solar and wind power projects, but it is not available for hydropower projects. So since hydropower projects has already been categorized under the ambit of renewable energy, now Power Ministry has decided to provide waiver to hydropower projects as well. So it is a big relief for hydropower companies. Apart from that, as per the statement, waiver is available for projects where construction work is already awarded and PPA is signed for signed on or before 30th June 2025. transmission charges will be levied where construction work is awarded, but the PPA is going to be signed after 30th June 2025. Apart from that, waivers shall be allowed for inter-transmission charges and not on losses. Also, it will be applicable, from prospective basis, not retrospective. So the government is hoping to achieve 500 gigawatt renewable energy target by 2030 by providing such relief to hydropower projects.
Right, and Prakash, since you're with us, just give us an update coming in on the oil prices as well, because they've continued to remain volatile. Now, ministry sources are saying that they will not ban imports of Russian oil. In fact, the government will keep buying oil from the country even beyond January 19th. So what are you picking up from your sources? What is the understanding that you're getting here?
G7 nations have reached on consensus to go for price cap on Russian crude. Sources are informing that Indian government has made it clear that crude purchase policy will not be impacted even if price cap on Russian crude is set to come into effect in the next few days. Senior government officials have also confirmed that India will continue to import crude oil from all sources, including Russia. Oil-producing countries, have assured India to supply sufficient crude and there will be no disruption. Sources are also informing that India will continue to purchase wherever crude is available at reasonable prices, except Iran and Venezuela. Government officials have also confirmed that the world trade has all options available for moving crude from one country to another country, and it needs to be remembered that crude is not a sanctioned commodity as yet, as far as Russia is concerned. India will continue to receive cargoes from Russia booked so far beyond 5 December 2022. Also, government sources have confirmed that Russia is now in the list of top 3 oil producer to India, and the government is open to do long-term contract with Russia for crude purchase, and Indian companies have been instructed to look for reasonable long-term deal with Russia.
Well, thank you so much for all of that, Prakash. But we'll quickly move on. India has the largest number of WhatsApp users in the world, and India's biggest insurer, LIC, plans to use that reach and give various services to their 30 crore customers. ET Now's Anurag Shah spoke exclusively with LIC's executive director, R. Dorayaswamy, to get the details on this one.
We have started providing information required by the customer about their policies and the services available through WhatsApp as the first phase. All the customers have to do is to save LIC's WhatsApp number, which is 8976862090. They save it on their mobile as LIC's WhatsApp number and send a hi to LIC. They will get the options available through a bot. Okay. So they will be having a list of services which are available. They can first know the details of their policies. All the policies will be listed. They can choose any policy and find out what is the premium payable. If they want to avail a loan, what's the loan amount they can avail. What's the current status of the policy, what's the total bonus that stands attached to the policy, and information about their policies will be immediately available.
For this, your mobile number must need to be linked with LIC.
Yes. The customer should register with our portal and also provide us their WhatsApp number. Some of them have only single policy number which is also available on the WhatsApp. Then straight away they can start using their services. If the policy number that they have registered with our portal does not have WhatsApp connected to it, then they may have to update their WhatsApp number on the portal.
Oh, that is mobile number basically.
Mobile number.
Okay.
Once their mobile number on which they are using their WhatsApp is registered with us, they can straight away start using these services.
Welcome back, and you're watching Market Cafe on ET Now. Harsh, looking at the cues coming in from the global market, but Asian market side bit of a positive scene that we've seen coming in, given that, we're seeing China seeing a bit of a reopening, at least in few of its cities. So that optimism is there that, people are watching out that China will reopen, things will come back to normalcy over there. And that is why we've seen Asian markets actually look at Hang Seng also. That has opened up with gains of almost 3% coming in trade. As of now, you can see on your screens, up almost 2.9% in trade. Even Shanghai has opened up with gains of almost 1% coming in trade, while Nikkei is a bit of a muted trade, but still a positive bias coming in over there, up almost 0.1% in trade. Looking at ASX 200, which is Australia's index, that is up also 0.5% in trade, while the Kospi is trading much muted, flip-flopping between the red and the green. Not much of an action coming in terms of the Kospi. So yes, Asian markets have opened up a bit on the positive side, edging higher on the hopes that investors, unwinding of the pandemic restrictions in China is keeping them on their toes. But let's move on and look at what the commodities are doing as well. We saw the oil markets actually rally on the trade, and why is that so? Because over the weekend, what we saw coming in, that OPEC Plus has actually kept and maintained their production cut and held the production cut which they had in the month of October as well. So in the latest meeting, they've held that production cut. So that is why we're seeing oil prices see a rally. And it's actually setting off the trend that we saw coming, the China reopening, which could support the oil prices in terms of coming down. That is not there, and oil prices are actually seen a rise coming in as well. So you can see, Brent crude oil is up almost 2% in trade. WTI oil also up almost 2% in trade. That's the update coming in on the commodities front. Indian markets as of now, SGX Nifty indicating a muted to a slight bit of a positive start coming in for the Indian markets.
Well, positive start is the verdict from Vinny at the moment. But let's quickly move on to stock-specific news. ICICI Bank had its analyst day, which got covered on Friday. And really the key takeaway is that the CEO, Sandeep Bakshi, also mentioned that the bank understands the need for brand capital. Really the mantra being that employees don't sell products which they themselves would not be selling to their immediate family. That's really the mantra. But going into the more granular details of what really was spoken about, well, the management said that there is a change in borrower behavior at the moment, and the underwriting has definitely improved across the system. In fact, when I'm looking at ICICI from a digital standpoint, they believe that ICICI Bank has improved its digital focus over the last 1 year, and they've increased and enhanced their lead when it comes to the digital focus. In fact, the InstaBiz app now acquiring of spends has doubled up versus a year-on-year basis, 1.7 times growth even in terms of customer count. Even the Business Pay 360 app, which is the B2B app for customers, is now having 4 times the number of value of transactions versus the last year. Active customer transactions are up 3 times versus the last year, and iLens provides that end-to-end solutions for mortgages. Now 80% of customers using iLens. So clearly across the board on digital, ICICI Bank really doing well. Even with regard to taking the bank to customer, what they are suggesting is all possible services are now taken to customer, and rural and retail are now working together to continue to acquire market share in that space. The manual share of underwriting in the business has gone down to 8% in FY23 versus 45% in FY19. So we're seeing a huge shift even there. And what the CEO also suggested was that the macro tailwind is the best in the last 37 years. Now that's a big statement coming from the CEO of ICICI Bank.
Okay, Harsh, so keeping all eyes on ICICI Bank after its analyst day meet. But let's move on and just have a look at what Uday Kotak has been saying. He said that India may be the only game in town for international investors, is what he said. And Uday Kotak is the managing director of Kotak Mahindra Bank. He flagged off the people being cautious on the investment cycle, but said that India appears to be the top investor's mind when it comes to growth. Kotak also highlighted that the numbers show consumption has picked up, but investments are yet to do so. He also said that the country needs to tweak the laws that will help the banking sector build scale to fund the economic aspirations.
Well, I'm sticking to banking. On the sidelines of the annual Banking Technology Conference, my colleague Ankur Mishra caught up with the Bank of Baroda MD and CEO, Mr. Sanjeev Chadha, who said that they will soon close the Bob Cards deal. Listen in to what he had to say.
I think there is, what you're saying is a fact, but I think there's also a bit of a recency bias there. If you were to look at things in 18 months before that, you might have found that things were actually the opposite. There was a lot of liquidity in the market, deposits were growing faster, and we actually were very bothered that loan growth is not there. So now what you're having is the opposite, which again is natural because the central bank has adjusted the liquidity and also there's a broad improvement in the economy. To my mind, as we move forward, maybe 2 or 3 quarters from now, the trends should converge. As of now, in terms of where large number of banks are in terms of the credit deposit ratio, for the credit growth to run ahead of deposit growth for a few quarters, I don't think should bother us very much.
Okay. Also, recently there was news of you had already declared about BOB cards that you want to sell the stake. We have also understood that there were few interested buyers. What can we hear about it in near future?
So I think the card industry is a great opportunity, and the business has been getting very significant traction by benefiting from the distribution strength of BOB. But we believe that this is the right time to bring in a partner who could actually complement the strength that the bank has, either by way of technology or by way of complementary distribution strengths. So we believe that we have made fair degree of progress. There is some interest, and quite possibly within this financial year, we might be able to announce a transaction.
Right. As far as capital raising is concerned, we have seen that not only your banks, most of the banks are going in a debt way. No equity raising is happening. Do you think there is a reason for it? And if I ask specifically for Bank of Baroda, what is the way forward?
So I think if you were to look at the kind of internal accruals we have, profitability has increased a fair bit. And if you were to look at our capital adequacy ratio in September, and you were to add back profits to that, you would find that the CAR was actually better than it was in March. And this is a time where the loan growth actually has been higher than what might be a sustainable level. So as we move forward and loan growth moderates a little bit and profitability has scope to increase because credit costs are coming down, to my mind, banks should in large measure be on a self-sustainable path for a few quarters as we go ahead.
Right. My last question to you is regarding the monetary policy, which is due next week. What are your expectations that interest rate will move upwards trajectory further?
So I think if you look at the global context, there seems to be a broad trend that inflation seems to have peaked. And therefore, the kind of pace of increase, the quantum increase that we saw for the last few quarters, that might moderate. However, there might be still some scope before we reach a stable environment in terms of interest rates.
And let's get a bit more stock specific as well. Other than ICICI Bank, there are a lot of other companies' management which actually met with analysts, and there are a lot of key takeaways coming in as well. Let's go across to Mamakshi, who's joining in with us to tell us which are these other companies, what are the key takeaways coming in for that. And good morning to you.
Well, good morning to all of you all. Let's first start off with SRF. Now, Investec has come out with a note highlighting some important key takeaways from the management meet. Now, the management is highlighting that the specialty chemical will continue to be a strong growth driver for the company going ahead. In fact, they believe that the next leg of specialty chemical growth will come in from the projects in the pharma space. Packaging films are expected to, however, remain muted given the EU power challenges as well as increased supplies. But nevertheless, they're expecting technical textiles to recover, and that improvement should come in from the fourth quarter onwards. Competitive intensity in the fluorine chemistry segment, however, is seen increasing. Apart from that, we also have DLF on our radar. Now, Bank of America Securities, we have a note coming in from there, and they are highlighting some key takeaways from the management as well. The management is saying that the underlying trends for demand are remaining strong. Supply discipline is seen to be better than the previous cycle. They also have active interest in gaining exposure to the Mumbai market, and apart from that, they expect DLF Cyber City Developers Limited to be REIT-ready in the next 3 to 4 months, the proceeds from which could potentially be used towards debt reduction in the annuity portfolio. And lastly, we have Samvardhana Motherson. Now they have reiterated its aspirational target to increase revenue to nearly $36 billion over the next 3 years from $10 billion currently. The management is evaluating multiple acquisition opportunities, and the acquisitions could require over $2 billion, which would be funded with a mix of debt as well as internal accruals, is what the management has said. They've also highlighted that their largest subsidiary has a pending order book of nearly 18.2 billion euros, which is with a share of almost 37% coming in from EV programs. Apart from that, they've also said that the aspirational ROCE target stands at nearly 40% in FY25 versus just 8% in FY23.
Well, thank you for that, Vamakshi. But I'll quickly move over to Lisa, who's also with us. Good morning, Lisa. Talk to us about what brokerages have been saying on various stocks today.
Well, good morning, everyone. And starting with Indian IT sector, Nomura has come out with a report on the same. They say that the revenue growth is likely to be slow. However, margins are expected to improve going forward. The deal wins are also likely to move towards cost takeout projects. They say that the valuations have cooled off. However, they prefer stocks with relatively stronger growth visibility. And on that basis, their top buy picks are Infosys and Persistent, while they have a reduced call on TCS. Secondly, on Nykaa, Goldman Sachs, encouraged by the continued strong growth momentum in the top line, they have maintained a neutral with a target price of 233 per share. That entails a 31% upside to the current market price. And they add that Nykaa's valuation reflects its strong growth outlook and margin profile. Lastly, on Mahindra Finance, CLSA has maintained a buy with a target price of 260 per share, which is a 14% upside to the current market price. Mahindra Finance has made many on-the-ground changes, and the stock is witnessing the impact of the same. November disbursement traction has remained healthy, and even the collections were strong. However, the only negative surprise in Q3 could be the net interest margins and the OPEC.
Okay, Lisa, thank you so much for that update coming in this morning from the brokerages. But Vamakshi, coming back to you, we have important cues and events to watch out for this week. Could you take us through those events?
Well, Vinny, let's first start off with the most important cue for this week, which is the MPC meet. Now, that is scheduled to be held from December 5th to December 7th. And on December 7th, we will see the interest rate decision come in, and markets will be moving on the back of that. Apart from that, we have some other cues that you should also keep on your radar. Now, EU sanctions on Russian oil are set to kick in from today. EIA crude oil inventory report on December 7th is another important factor to watch out for, considering the moves that we're seeing in crude recently. Initial jobless claims for the US as well as the US PPI data will also be another important cue to track. Apart from that, on the corporate front, we have a lot of action coming as well. Dhanlaxmi Bank will be mulling fundraising on December 5th, that is today. Apart from that, we will also be keeping an eye out on Bikaji. The company is all set to report its Q2 earnings on December 6th. And lastly, we will be also watching out for BLS International. December 7th will be the last day to buy the stock in order to be eligible for their bonus issue. Apart from that, we also see that lock-in period will be opening for Star Health and Anand Rathi later this week. We also have a new listing coming in this week on December 8th. Dharmraj Corp Card will be listing on exchanges on December 8th.
Well, thank you so much for all of those stocks to watch out for, Vamakshi. But we'll quickly move on to Ashesha, who's standing by with us. Ashesha, talk to us about the major stocks in news. Good morning.
Hi, good morning. So Mahindra Finance will be the first one in focus in today's trading session, and this is after the company released business updates for the month of November, where they say that disbursements stood at 4,500 crores, an uptick of 75% is what we have seen on a year-on-year basis. Total disbursements year to date now stand at about 31,000 crores, an uptick of 99% on a year-on-year basis. Capital efficiency ratio now stands at 96% for the month of November versus 94% which stood as on November 2021. Moving on to ION Exchange, which will also be in focus in today's trading session, and this is because company has been awarded a contract by Indian Oil Corporation Limited for 5 years of zero liquid discharge plant at Panipat Refinery, and the contract value of this particular project stands at about 343 odd crores. Moving on to Hudson Agro, then they've considered and approved the terms of rights issue, where they've finalized the rights issue price at 419 rupees per share, and the record date for the same has been fixed as the 8th of December. Moving on to Ashiana Housing, then, where the company has informed the exchanges that they've entered into a registered development agreement with a Jaipur-based company, Pink City Infracon Private Limited, to develop a group housing project on a piece of land which is owned by this particular company, and the approximate saleable area stands at about 4 lakh square feet. And on account of this particular agreement which they've entered into, Ashiana Housing will also be in focus in today's trading session. Moving on to cement major Ultratech Cement, where they've said that they've commissioned commissioned 1.8 million ton per annum greenfield grinding capacity in Maharashtra. Apart from this, they've also announced commissioning of 1.8 million ton per annum brownfield clinker-packed second grinding capacity in the state of Madhya Pradesh. This is a part of first phase of capacity expansion that was announced by the company in the month of December 2020, and company's total manufacturing capacity now stands at about 119.5 million ton per annum. So on account of that, this particular stock will also be in focus in today's trading session.
Okay, Ashesha, thank you so much for the stocks to watch out for today at 9:15 a.m. But let's look at what Hemang Jani is saying. He said that Ultratech and JK Cement are the top picks in the cement sector. Hemang Jani, who's the equity strategist, senior group VP at Motilal Oswal, listen in to how he decodes and what he makes of the cement sector.
We have a positive view. I think post Diwali, you're seeing pick up the activity, and across major markets, we're seeing price increase, and you're also seeing a decline in the petcoke prices, which definitely would help the margin. So we do like Ultratech. That is our top pick in the cement space, along with the names like JK Cement, where we think that the overall growth visibility is much better.
Well, yes, and after last week's record highs, top market voices remain bullish on India, from predictions of the Nifty at 20,000 to Sensex at 80,000. Some market gurus seem optimistic of the bull run to continue. Listen in to Devina Mehra on where the market is headed in her view.
So from the beginning of the year, or actually end last year itself, I had been saying that India will be an outperformer this year relative to global markets, which you have seen has been quite dramatic. So, rather than only the absolute movement, if you look at relative to all global equity markets, India has done very well. And the reason for that was that it had not done so well in the 2010 to 20 decade, whether relative to other markets, when it was almost consistently in most years an underperformer. Out of 42 indices, it would be 21, 24, 25, like that. And for that entire decade, also equity compounded only some 8.5%, as against a longer term average of 15, 16%. And that time, the fixed deposit rates were also around 8%. So, equity gave no extra return at all. So in 2021, when that trend changed, when after a very long time, India moved through the outperforming end of global markets, I was quite clear that trend would continue this year, which it has. So, that quite clearly has happened. Of course, I had also said at the beginning of the year that it is not going to be 2021 in that everything goes up together. So it is going to be a more selective market where you have to be choosier. In June this year, again, I think on your channel itself with Nikunj, I had made a very clear call that it was time to be back in the markets because you were in danger of missing out an up move.
Okay, that was Devina Mehra, but keeping it with some of the big market voices, speaking of the top market voices, we also had Neeraj Diwan, the director of Quantum Securities. He is bullish on the infra space. Listen in to his top pick from the sector.
Most of the infra EPC companies currently have very strong order books, representing over 3x book to sales. But there are few companies like NCC who have an order book at relatively higher book to sales of 3.5. NCC is very well placed to capitalize the big GUI infrastructure pipeline. The company order book, which is very well diversified with presence across diverse verticals in the infrastructure space, stood at 40,000 crores, which is 3.6 FY22 revenue. Margins also expected to pick up Q3 onwards on the back of pass-through clauses in the contracts and new projects which have been won at higher input costs. Additionally, ability to deliver projects in time and expanded opportunities with eligibility to bid for most projects provide a competitive edge to the company. The balance sheet of the company is expected to strengthen further with the planned reduction of 600 crores this year out of the 1900 crores debt that the company has on its books. And with the commodity prices stabilizing and monsoon behind us, we continue to see strong earning growth for NCC. So we value NCC at 10 times FY24 earnings. And on this basis, our fair value comes at 115, which is a good 43-44% upside from the current level. So I'll recommend NCC for long-term investors.
Well, yes, and with that, we're completely out of time on this edition of Market Cafe. From Vinny, myself, and the entire team that puts the show together, thanks so much for watching. Of course, the market takes the action forward for today.